Powell, non-farm payrolls, and 4K ES and 0 DTE options on top of that. That's all on the menu for our weekly outlook of markets and profile for the week of March 5th, 2023. Hey everybody, I'm Josh. I'm the founder of Trade with Profile. We're a skill development firm. We come alongside active developing traders, typically in the retail space, but try to bring institutional understanding and insight so that if you want this to be a significant portion of your future, you could do so. And we begin each week by looking at a number of markets, specifically the S&P, the NASDAQ, the Russell, and Crude, to get an idea of what potential ideas we have, scenarios, key levels, as well as any other ancillary markets that might be of interest as we approach the week, and look to do that in a week-by-week fashion. So this is kind of the first step each week as we prepare for the week, and then follow on with daily revisions to that along the way. I've been off a couple weeks, just doing some self-care. Really, markets are hard, and approaching this stuff is hard. The hardest aspect of that often is yourself. We often encounter traders who are developing who try to offload responsibility for their approach to markets to, it's the they of the markets or the market's conditions. But really, it's each of us as we approach the market, and what skill we do possess or don't possess. But also like what else is happening outside of our lives. So I've taken some time just to take care of me, which has been great. And I trust that you guys have all been good, but we've got some exciting stuff in the weeks ahead to talk about. So let's jump into it, shall we? And see what this week has to offer us. The place that we typically start is to look at the macro picture and just get a sense of what's in play and what's the macro narrative we're operating. Has there anything that's been really changing? The first thing is that we remain in what's called a fiscal market, where we have the Fed against equities. What does that mean? That means that we are at inflation that is still decades high and holding, though we may be past the peak, but we're in more of a longer term period of inflation as opposed to just short term periods of inflation. What that means is that the Fed's ability to fight that has to do with interest rates. And so they've raised interest rates, are still expected to raise interest rates at every meeting through the end of the year. And what does that mean? Well, if they do 25 basis points at each meeting that's left this year, we're looking at 350 basis points left in the year. That's almost double the rate that we're at now. So the impact of that is still not yet felt, and higher inflation equals higher rates equals lower EPS because you have higher borrow costs for capital improvement. That means lower equity prices. So there's still pressure on the market, but they don't want that to go, all the way to the downside quickly. And interest rates are expected to rise into the fall. So still expecting that to happen. So that's not going away. That's a macro narrative that's keeping me from getting, specifically bullish, especially when we look at some of the prices that are in front of us. And then the impact of short-term hedging that's taking place in what we would call 0 DTE or short-dated options. And specifically, these options that expire the day of. What we're seeing in the market is we're seeing participants who are buying protection for maybe the next event, and then once that event's over, then they're getting out. Or if as happened last week, we had some early pressure down lower, below some key levels. What ends up happening is participants, namely hedge funds, institutions, are buying cheap calls as a hedge, and you get enough of that call buying that takes place, and that starts a feedback loop that takes us higher. But the net effect, though, is that it's not sticky. So once those things expire, the inventory that was bought to hedging, is now liquidated, and we kind of get right back to the same place. So it's definitely very much of a big fight, and will remain a fight. And we saw a little bit last week where the price and the economic narrative were reconverging. So the narrative has been fairly bearish, and we saw price heading back toward bearish prices, aside from a kick at the end of the week. So that's kind of the macro story that we're in. That's still the place. One of the quick rules that you learn is to not fight the Fed, and the Fed is still against markets. So don't lose sight of that. And they are going to continue to put pressure on that, and that will work its way through the system. We've not seen all of the impact of that yet expressed. So all that to say, just, be cautious. Approach via your playbook. Stay on your playbook relative to the narrative. Know the narrative, but also know where opportunity is when you have price divergent from narrative. And then the question is one of these wrong, right? Is it price wrong or the narrative wrong? And we just keep getting reinforcements that the narrative is the one that's right, and then price corrects to that. So, I'm looking at, quick rallies as opportunities to sell, into lower prices. Again, until I see a real change in the narrative, and I've yet to see that. So let's get the overall macro stuff. That's not really that important day to day, but that does give you kind of the context of the space, and especially as you're trying to wade through the noise of what's out there. Okay, so that's the macro stuff. Let's talk about the calendar this week and what we've got ahead of us. And just looking over here at the calendar, that you can find this on the TWP website very easily. Monday, we've got factory orders. That's inflation related. So we've seen more impact of these like smaller releases because everything's inflation sensitive, right? And inflation means what the Fed does. So that's always impactful. We do have Powell testifying. So he does this a couple times a year where he testifies in front of Congress. He'll do the Senate and then the House. Expect, I always kind of go into those days waiting for him to finish speaking. It'll be early in the day. He'll have a prepared statement to start, and then he'll do questioning. Typically on Tuesday is when he gets the first market reaction. On Wednesday, he's really kind of said it's just going to be a restatement of what he said on Tuesday. Don't expect anything really significant and different there. The larger impact is going to be on Tuesday as opposed to Wednesday in terms of price action. Wednesday would just be a confirmation. On Wednesday, we do have exports. This is all inflation related, right? That's all pre-market. Powell again. EIA and WASDA for grains is on Wednesday. 10-year note and beige book. Typically, when you got beige book, which is another Fed release, however, that's trumped by the fact that the Powell's there. We have Chinese CPI overnight. Thursday, jobless claims. And then Friday, we've got non-farm payrolls. The impact of non-farm payrolls is that one of the things that the Fed is looking at is a cooling off in jobs. So I would expect that if we saw a weaker jobs report, expect the price action to be bullish off of that. If we see a stronger jobs report, look for that to be strong early and then sell. Because a continued strong labor market means continued strong demand. That constrains your supply. That keeps your inflation higher. That means the Fed's got to be higher for longer. Okay, so just be a confirmation of the narrative. So all that being said, we still have to trade the price. Got to be ready for every opportunity, but that's going to be the typical reaction based on those inputs. Okay, so just a restatement of kind of like what we're looking for on the calendar. We got factory orders on Monday. Tuesday, we got Powell testimony. Wednesday, we got Powell testimony and then EIA and WASDA. Thursday, jobless claims. Friday, non-farm payrolls. And then looking ahead, we have next week, we've got CPI for March. And then we also have quarterly OPEX. That is a pretty big thing as we head towards March FOMC. So next week's going to be a big setup. I think we're going to be looking for Powell to telegraph what's in play next week as we head towards those bigger things. With the quarterly OPEX, expecting the market to really kind of the equity markets in particular to find a range and be kind of stuck in a range until we get past that quarterly OPEX, and then we can get some more freedom and get a larger move. All right. So with that, let's now start digging into specific products, and we'll start with the S&P. And a place that I like to start with the S&P is even just to look at what's happening under the surface in terms of the VIX curve. And this is where that whole zero DTE thing is in play. And in a sense, we've really kind of broken our VIX curve. And what is a VIX curve? But a VIX curve is looking at comparisons between pricing of options at different durations, and really letting us know like who's committing dollars where and how scared are they. And so we look at a couple different durations, so kind of 9 to 30 days. So the VIX is 30 days, and then we look from 9 days out to a year. Okay, so the smaller or blue line is the shorter dated, red is the longer dated. Red has been, so the longer dated stuff has been fairly suppressed and complacent most of the year. This is a combined curve, which has also been kind of in the middle of the muddle. what has that meant? That's meant that we've not really seen anybody commit long-term dollars to anything. It's all been very, very short dated. We get participants, where we would go inverted here. That's essentially on the short end of the curve, the very, very short end of the curve and 0 DTE, where we're seeing participants hedging aggressively around an event. Now, that could be call buying. It could be puts. So in either way, but once we get past that event, it's kind of gone. We're not really seeing anybody really going into anything longer than that, which means that we also don't have a really, really good and sticky high or low like we've had in the past, where when we've seen significant pinches across the curve and conviction in the curve on all time frames have been very, very predictive for longer term swing highs and lows. And this is part of the feedback loop within markets. With options and dealers and so forth. We've not had that, which is, also kind of, speaks to kind of where we are. So, we're still in the middle of the muddle, very complacent, not seeing any commitment other than over, short period of time. And this is, looking at the SPY, obviously the ES is a derivative of that, but you can see we're just in a very tight range. We did kick off of the middle here at 395, but we're really just in the middle of a multi-month range. Ultimately, we're going to resolve one way or the other. If the narrative changes, that could be higher. If the narrative fails, then to the downside. And we've got some targets around that. But let's look at the longer-term picture on the ES. And we can see here, as we come into this week, and these are quarterly profiles, we're looking at really strong push above that key 4K area. So you can see we're really in a larger bracket from 3,800 up to, get that corrected, from 3,800 to 4,200 is the playground. We still have started the year higher. So we've left the lows from last year. I think that is of concern. We've got the yearly open here. We did get a kick save above that 4K. That's going to be very, very important going forward into the rest of the year. If we fail here, then we open the door to retest the yearly open, and then we get back around 38.57 at the bottom of this bracket, and then it's going to be, I think, a fairly convicted move towards the lows of 2022. While we're above 4K, well, we can easily push towards 41. That's actually in the cards this week in terms of expected range higher. So as we're looking at the shorter time frame, so we're going to start here by looking at an 8 hour, still with monthly profiles. We do have new lows for the month, back above the year-to-date VWAP, below last month's VWAP, and we're in what I call a ping pong posture. So this means that we're below 20-day and above 5-day. So you're in ping pong in here, all right? Now, if I look at the profile of the last 5 days, I see that as we were pushing higher, we're running out of inventory. What does that mean? It means that you don't want to be chasing this to start the week, although I would expect, because we had higher prices at the close, we closed on the extreme of the week, right? Here's your weekly open, pushes and then comes back higher, that we would push and continue to push higher in the week. If we push immediately higher, that's only going to stretch the rubber band, and then you're going to get a snapback, especially if it goes all the way up here. So what I'd like to see early balance in the week and then a push. So we got something to lean on, or an early pullback towards that 4K that then gives us a push higher. However, what we can see if we spend more time here at 4K, we're going to pull this value lower, which is accepting lower value on the larger auction, and it sets the stage for us to explore towards lower prices. If we look at that on a 2 hour, okay, here you can just see the last 2 days, the really, really big push that took place here on some pretty good RVol. You got some, pretty aggressive sellers in terms of a relative volume, and then just kind of drifted higher, to close the week. But see how thin this profile is? That's danger, Will Robinson. So don't be chasing that, especially to start the week. In fact, if we go and look at the TPO chart, you can see we have a couple multi-distribution trend days in play here. Lots of singles and poor structure, gaps, single prints. That's all likely to get refilled at some point. It's saying that the market's really impulsive. It's not really checking. So on Monday, what's kind of the plan is, we're expecting to be above 40.25. We'll look for a push up towards 40.70 and get this naked VPOC. Could push as high as 41.90 and then get some rotations. So we're looking for rotations in the direction of the trend. If we open in range, we'll look for those new highs unless we're below the halfway of the session, then we could fail just given how stretched the inventory is. If we gap higher on Monday, I would start looking short, especially if we get and tag the 4067 and then look for a reversal back in this direction. So that's going to be kind of the plan. And this can all be accelerated or impacted by what Powell does and what non-farm payroll does. So we just know where the key prices are. If we could continue to hold higher prices, well, then we know where the ultimate destination for the week is, and that's going to be up toward this 41.29, 41.50 area. So that's going to be our key upside target. Our weekly expected stuff is up there, so that's what we're looking for. And in terms of our plan for the week, buyers are in control above 39.90. We're in a balancing posture. We've got Powell non-farm payrolls. We're looking for 39.50 to 41.41 in this macro range, but looking for early week continuation higher that would lead us to fade later unless we can just get up to that 41.20 and hold. Early pullbacks into weak inventory, best for buyers unless they accept below 4K, because 4K is crucial for the auction to defend. So that's our plan for the S&P. All right. So let's now go take a look at the NASDAQ and kind of take a similar approach and perspective there and see what we've got going on. All right. Here's the long-term macro. Right. We are above 12,100. Really, really key for us to hold. This also is a quarterly profile where we've just opened and pushed higher, have had a pullback to the biggest amount of inventory for 2023, and now we're pushing above that. What does that mean? That means, what does that mean? It means that 12,100 is super, super important for the auction to hold. We need to hold that. As long as we can hold that, then 12,550 is a very reasonable target for this week. Above that, we could push in a week beyond that up into OPEX towards 13,250, but we'll wait to see about that. If we push higher and then come back through this area, then we're going to be back towards 11,700. It's kind of a key composite price that would open us up toward pushing towards the yearly lows in subsequent weeks. But, I think we're really going to be kind of constrained in this area until we get through OPEX. As we look at the short-term chart or shorter-term charts here, we'll start here with the 8-hour first. You can see really big push off of the year-to-date VWAP. Now, a little bit different posture in the NASDAQ in that both the 20-day and 5-day are here. So this is a pretty bullish posture. It means as long as we stay above this composite, we should push. And I would say that 550, last month's profile, or VPOC, is the key target higher for the week, especially if we could balance and then continue higher. I think any initial push higher is likely to get faded back to try to find buyers. Ideally, if you wanted to buy, you either want to see this thing trade sideways and have some inventory to lean on, or you want to see a pullback that does not exceed 12,100. If we go through 12,100, if we're below that post Powell, if we're below that post non-farm payrolls, then that sets us up for a push toward challenging this buying excess and making new lows ultimately towards that 11,700. So that gives us a kind of a picture of what we're looking for in the NASDAQ. If we look at the weekly charts, here you can see that we almost engulfed the prior week. Very strong push, 2-day push off of that diminished inventory as we close the week. So, be careful chasing that early in the week. When we look at the TPO chart, you can see it's just like the NASDAQ or the ES, multiple distributions, very poor structure. Whenever I see poor structure, especially when I get 2 days in a row, that's just impulsive. Okay. So I want to see some backfill. You can see the composite 5-day over here. I want to see some build out in the profile before I want to express that. So that means that for Monday, if we open in range, a pullback down here to 12,200, then I could go day after trend higher for new highs up toward 12,350 and decision levels higher. If we gap, I'm going to look for this auction actually to fade back in this direction because the inventory is so overstretched. And then if we're below 12,200, we could actually reverse this trend and eat back into where value is lower. So should stay above 12,200 on Monday, but we'll have to see how that goes. All right. So that's the cues and our ultimate plan there, just as a restatement there. Buyers in control above 12,100. Bullish posture, but we got a couple key catalysts in Powell and non-farm payrolls that could change that. And, you would know if we're below those composites, that's going to be changing the story. If we can hold 12,100, we're looking towards 12,550 up to 12,632 expected range. If we fail, then we're back, below and looking for cleanup, starting our move towards 12,700 or 11,700. Probably not this week, but in subsequent weeks. All right, now let's go look at the Russell. All right, and we're going to see what's going on in the non-correlated index. And you're actually going to see that the Russell is, also in a larger range, even more range defined than the NASDAQ or the ES, but we're really just stuck in this really, really big range. And what do you see? You see buyers stepping in above a key composite here at 1900. 1900 is really, really key for this auction. You want to be bullish, Russell, you got to stay above 1900. And that's really, our plan and expectation for the week ahead. As we go look at the 8-hour here, you can just see push from balance. This is a similar posture to the NASDAQ in that you've got 5-day and 20-day in agreement and buying above that. So that's bullish so long as we hold this price, and could easily, take us all the way to the top of the bracket. Could easily do that. And we'll look to balance along the way. When we look at that on a weekly basis, similarly, note how thin this is as they pushed higher. Got a couple key nodes at 45 and 67 that would be key targets that if we get up there, look for the auction to balance or find some rejection. If we can get some weak responsive activity early in the week, that would be the best chance to buy so long as it doesn't go below 1900. We can use a TPO chart to know kind of where this is. All right. So big, massive double distribution trend day. On Friday, we've got a key naked VPOC above at 1950. For Monday, as long as we're above 1932, we're going to look for a push towards 1950. Ultimately, we got a couple spots along the way that could pause us, but that's going to be the key reference up there. Also, the daily expected high is there. If we open in range, look for a test to 32 and then new daily highs, and then we'll see. If we gap and hold, it's going to be up here. Gap and fail, you're going to go to 32. And then if you're below, if you're in the lower part of this, we're going to push back towards the composite. All right, so that's going to be the plan. So we expect higher prices, buyers to stay in control on Monday. If we open in range, I think that's your best chance on that early responsive selling to find buyers for new highs, but make sure we stay above 1900. That's going to be super, super important. So just a restatement, again, buyers above 1900, bullish posture, but we got Powell and non-farm payrolls that could challenge that. If we stay above 1900, we could look at 1980 as an upside. We break 1900, we got 1881 as a downside, still in the middle of a massive macro range that we got to be mindful of as we press on into the year. Last but not least, let's talk about crude oil. All right. Looking here at the macro picture in crude, really massive day on Friday. Pushed us above kind of the key pivot. Crude is also in a really big range. You can see here from about 74 up to 83. We're in the middle, but this is significant buying that we want to lean on as we go into the week ahead. Just looking here at the shorter term. Oh man, big. Not a couple things to note about this. One, really big price movement, but look at the RVol. So relative volume is high, pushes us through like a hot knife through butter through composite inventory. That is very bullish. It also means with clarity, as long as we stay above 77.50, above 77.50, and we're looking for a push first to 81.15. Most traded price here, and then towards the top of the bracket, and we get above the top of the bracket, then we have an opportunity to keep pushing even higher down the road. That's not all going to happen this week, right? But down the road, really big push to close the week. Now, note that they close above 2 standard deviations of monthly VWAP, so do not be surprised if we see a pullback into this before we find more buyers. That's what I'm going to be looking for. Unless we're inside range, I wouldn't be thinking about being long just yet. If we gap, that's very likely going to get faded because you're going to be way above standard deviations. That's going to kick some algos to go, whoa, price risk. Multi-distribution trend. We do have some singles to clean up, and we got a naked V pocket 80.17 before we push towards that 81.15 area. That's all within play on Monday. If we open in range, a test into these singles and then back above, I think could be a day after trend, playbook trade for new RTH highs. But really, as long as we're above 79.50, we're looking towards 81.15. And not unless we get to 81.15, would I look short, or if we failed below 77.50. If we fail there, then I would also look for sellers to step in with more aggression, as it were. All right, so just a restatement here of the plan and what we're looking for. Buyers above 78 with the key reference there at 77.50. We do have EIA. We're looking about $9, almost $10 of range this week. Convincing strength on Friday. We want to lean into that. So any early weakness in the week that does not get below 77.50, we want to be long towards 81.15 and ultimately 82.50. Even as high as 84. We'll have to see, but we definitely want to defend 77.50. All right. Let's talk real quick here about some other ideas in focus. And to do that, like what I do is I always go and look at the quick sheet. You can download this next or related to the video. This is available as a link, but this is just a high level looking at products by sectors. And I'm looking for different postures of the auction that I can go and see, hey, is there an opportunity there? Is there something to note? One, we've got a 10-year note, is 10 years balanced, looking for a move. We got copper balanced, looking for a move. Soybeans is balanced and looking for a move. And we've got WASDA in play, so that makes sense. Feeder cattle are in an extreme posture, so look for a potential fade off of early weekly prices higher there. Also got Bitcoin, very balanced and looking for a move. Also the A50, looking for the move. I am noting that we do have quite a disconnect between monthly VWAP and the VIX in terms of, we're looking, the VIX is underpriced. So be mindful of that, especially as you go into Powell talking and non-farm payrolls. I think that may be a little bit of a canary in the coal mine, but those are a couple ideas that I'm looking for. When we're balanced, we're looking for moves from balance. We know where those key prices are that we're looking to defend. When we're on extremes, then we're looking for failure or sideways trade to consolidate off of that. So there's a couple ideas there. Feel free to dig into the quick sheet and see what other ideas you have. And I'd love to see what you come up with if you're looking through that, or have questions about how to create an idea, a narrative idea around the quick sheet. Pretty cool tool that is available each week. All right. With that, couple other things for you this week. Is this new for you and you've not heard us talk about the 4 questions to ask and answer before placing a trade, go check out TRADEWITHPROFILE.com/4 questions. You can also connect with us on Twitter. If you want to talk to somebody in our team directly to do a review of your trading playbook and how you're approaching markets, especially in the 4 products that we like to look at, feel free to schedule a free insight session. It's a 30-minute session just to allow us to kind of audit your approach and give you some constructive feedback and some ideas that you can work on immediately to improve your approach. And then if you want to take that the next step further, you can always do that via a trial on our development desk, TRADEWITHPROFILE.com/pathway. Questions about the platforms that's seen on this is either from it's Edge Pro X from edgeclear.com or Window Trader Blue from Window Trader. Great platforms to take a look at and check out to support better decision making. And then for those of you who are working through the pathway right now on our desk, we'll see it via Slack and our weekly development sessions. All right, that's it. Thanks, everybody. I hope you have a fantastic week. Again, watch out for Powell's comments on Tuesday and follow through on Wednesday and then non-farm payrolls on Friday. But the big bogey is going to be CPI and OPEX ahead of us. Lots of great opportunities yet this year. So keep working on developing your playbook, using the 4 questions to define your ideas, and using the profile to find those key areas that are important to the auction, and you're going to do great. So thanks for watching, and we'll talk to you next week. Peace.